Welcome everyone to the BBA Show, episode 4. This is AKW Analytics, aka Adam Wyatt, here with Rich today. And today we'll be talking about Bitcoin Classic and Bitcoin nodes again. We'll talk about the Fed, central bank policy, and some foreign exchange stuff. And then we'll touch real quick on maybe some gold prices and the Ethereum bubble that the whole crypto community seems to be enamored with right now. You can almost just smell the greed there. So we'll touch on that, no doubt, from a market perspective. But first of all, let's go ahead and check on the nodes. I know we did this last week as well. You can see that obviously Bitcoin Classic nodes have moved up substantially. XT nodes down substantially, and the unlimited nodes are trending down. You can see those kind of here. XT, big pop in the beginning. Everybody was all excited about it. They didn't even get up to 1,000 nodes. It's been a slow drip lower until recently, which has been a more precipitous drop here because of Classic. Unlimited is topping out here too, but that never really garnered much support at all. Almost 100 nodes is as high as it got. But as we can see here, let's just compare XT to Classic, and we see XT within 5-6 days of being released, it topped out at about 1,000 nodes, and here we are. We're about 2 weeks in here now. I must note that before this, there was just some binaries and not many people were running nodes. But today, the official Classic client or implementation was released by Gavin, and so everybody can run Classic now. And in fact, not too long ago, maybe an hour ago, Brian Armstrong of Coinbase said that they're switching nodes to Classic. So we'll see over the next 24 hours. It'll be pretty telling to see what this number does. Now, if this number shoots up above 1,000, which I doubt, but if it does, then it's something to pay attention to, particularly if the core nodes come down. Now, up until now, core nodes have been pretty steady despite the increase in Classic nodes. So core nodes are holding firm. But if we start to see a migration or substantial increase in Classic nodes just coming out of the blue, then that'll be something to note. But at this point, it seems to me that it's on the same trajectory, if not a weaker one, as XT. And we all know how that has ended up. It's pretty much an abject failure at this point, and everybody's moved on to Classic from it. So we'll see how it goes. But again, let's make sure everybody's clear about this. Even if Bitcoin Classic was able to gain 80% of the nodes, and right now Core has 80%. So if Classic was able to get, let's say, as many nodes as Core does now, that would trigger. That wouldn't trigger the fork, but it would trigger something in the protocol that would start a timer, so that after 28 days, if that 75% node majority could be maintained by Classic for 28 days, then the hard fork will occur. So there's a big threshold for this thing to actually happen, a huge hurdle, and we'll see how it goes. But again, my suspicion is that this will fade once again, and Matt Corallo of a Bitcoin Core dev just recently, in fact, laid something out on the dev mailing list specifically about a post-SegWit hard fork block size increase. So I think this is all getting resolved anyway. I think the Classic fades. And I think the recent kind of steadiness we've seen in the price, and maybe even bullishness we've seen in the Bitcoin price, is because the market is seeing through this and realizing that there's most likely not going to be a contentious hard fork. So that's good news. And just as far as the Bitcoin price, like we just said, things look pretty good. We had a nice little spike up this morning up into the high 380s before hitting resistance up here in what we call an OTE zone, an optimal trade entry short zone. So we had expected a retest of this trend line after it was broken. So we continue to chop around here. Volume looks good. We expect this line to hold, and if not, these support areas down here to hold for the next couple of weeks as we take another run at 400, particularly if we get some more clarity on the whole Core Classic thing. So with that, Rich, you got anything for me?
Yeah, I'm curious, Adam. Are there any differences between Classic and Core other than like the block size increase? And I have sort of a direction I'm headed with that based on your answer.
Yeah, there's some governance issues. There's a different core development team, obviously.
Right.
And there's some other more minor technical stuff, but mainly it's block size increase and then this governance, an issue I think that to paint this with maybe too broad a brush, but the classic promoters seem to be enamored with the idea that there's going to be a vote about certain things that go into Bitcoin, and it should be more like a political democracy, which I think is ridiculous.
Insane.
Bitcoin is not a democracy whatsoever.
No, not at all.
Code, and you put it out there, and if people like it, then they adopt it. There's no voting whatsoever. And then the core are more in that camp. So not.
Well, they vote with their dollars, right? People vote with their money, right? And that's the way I like it, because there's economic incentive. You know, that's why if people who know me know that I'm pretty, well, maybe I should stay away from politics. But the problem, there's an issue with democracy that I have, is that people who don't have stake in the game get to play the game, right? And I don't think that's a good, an efficient or effective way to achieve any sort of ends when there's people who are people who have an economic incentive and an economic stake in the game, because then it becomes an unfair playing field, right? Because then the people who have invested are affected by the people who haven't invested. Yeah, the people resort to short-term thinking if they don't have any real skin in the game, right? Exactly, skin in the game. And Nassim Nicholas Taleb, the awesome author, he has like many books about statistics and what uncertainty and how do we embrace uncertainty. And part of that is like basically calling out the people who are shills, right? The people who don't have skin in the game don't get a say. And so I'm all for that. But so I wonder if, you're talking about Brian Armstrong from Coinbase, who just came out in support of Classic. Do you think this is more of an effort to just let's get something done to increase the block size? And if Core were to adopt some sort of mechanism to increase the block size, whether it's segregated witness, which I know isn't necessarily increasing the block size, it just increases the amount of space on the blocks to be used for transactions. But even still, that seems like, do you think it's just sort of a mechanism to spur some sort of change as opposed to stagnation?
I do. And I think it's some of the language that's been used on that side is to break the core monopoly, that kind of thing. And I think they want to introduce some form of competition, which I think is okay. It's just the fact that they're so forceful with a contentious hard fork when it seems that the community is moving towards a real consensus, within the kind of the core sphere, seems odd to me. And on Brian Armstrong, and I don't know the guy, I don't have anything against him personally, but I don't really think he fully grasps what he's involved with as far as Bitcoin goes and the monetary and political and economic implications of what this thing is. Maybe, like a lot of people in the space, he uses more of the payment network, but those of us that have been here for a while and are far more, let's say, dedicated emotionally, feel that this is much bigger than that, right?
Yeah, I agree. But for a person who is the CEO of a major Bitcoin company to come out and say that, he has to. I'm giving him the benefit of the doubt here, but I just feel like he has to have some sort of economic incentive in doing so. And maybe it's that exact thing what you're talking about, the payment network.
Yeah.
If there can be more transactions in a block, then he makes more money.
Exactly. So, I think it's that, and I think somewhat unrelated. I saw BTC Drac tweeted earlier today that Gavin supposedly has an equity stake in Coinbase, and so since this is Gavin's Classic is kind of Gavin's pet project, and this is all buddy with those guys over there at Coinbase, then they just might have kind of a symbiotic kind of relationship going on.
Right. I mean, it's hard for me to just jump to that conclusion that there's I'll screw over a whole economy just to help my stakeholder, my stock position out, especially with a person who's been around the Bitcoin economy, whom I somewhat have trusted with his ability to, have the best interests of Bitcoin in mind. But then again, he did team up with Mike Hearn, whom I despise, and I did lose a lot of respect for Gavin in that, that sort of membership that he developed, that relationship he developed with Mike. But all that aside,
yeah,
I don't want to jump to conclusions like that, but it's interesting information to process and to have based on the actions, what's going on right now with the node traffic here.
Yeah. I mean, it's absolutely clear what this tells me is that 80% of the Bitcoin network is just completely ignoring this thing. I mean, almost. So if you see Bitcoin XT had 900 nodes at one point, and it was kind of holding in the 900 range for a while. Classic has been known about for a while and has been trying to garner support for months now, and they got a measly 563 nodes actually running the software right now. Now, again, I know the official client just came out today, but people that know what's going on here have been able to run a node for longer than that, and they're not. But core nodes continue to stay stable at around 4,000.
Right.
Unless those guys are migrating or making a decision with their computers to run Classic, then I just it's crying wolf again to me.
Yeah, and that my last thought on that would be, to me, this seems like maybe people were anticipating the people who wanted Classic were anticipating the release of the code, and not just binaries, but actually the release of the actual code, and in that anticipation, we're prepared to migrate to the Bitcoin Classic node. But I wonder if this is it, right? These are the amount of people running nodes that are for Bitcoin Classic, and they maybe that's the peak. It's just like an immediate spike, parabolic spike, and then a crash eventually. Especially once I do think it's going to happen. Bitcoin Core comes up with the resolution for some sort of block size increase.
They're so close now. I mean, I think it's a matter of days, weeks, or days until that actually happens. So yeah, and I mean, not to confuse anybody. Back when right before this, I said voting. You're voting with your resource. It's not a democratic vote. It's like I personally run a full node here in my office just all the time, on my big computer, and I run Core. And you'd really have to start seeing guys like me choose to start running different code on their computers, and that just I just don't see it happening. So there is a vote, but it's a vote that you have to pay for.
Exactly. And people will. I firmly believe that people will always choose certainty over uncertainty when they have the choice, and especially when there's an economic incentive. And the people who have skin in the game with Bitcoin Core it will take a massive amount of uncertainty regulation, right? Like to be able to alleviate uncertainty for them to move away from Bitcoin Core. And I just don't see that, especially we don't know the impact that the Classic code could have, whether maybe there are some bugs, maybe there's some things that Gavin has put in there. Like Mike Hearn, he was trying to sneak in some blacklisting of coins in his code.
Yeah.
You just don't know.
Right.
So I think that the market will always choose certainty over uncertainty, even if it's, contentious, right? Like I'm talking about the fact that the block size needs to be increased, or so people argue. And yet the people running these nodes over here on Bitcoin Core have genuinely just been really averse to switching.
Yeah. And I think they'll continue to be, especially again when Bitcoin's working now and Core is making efforts to address this right now, being talked about right now. So, yeah, I totally agree. So to kind of transition forward to our next subject, and speaking of market uncertainty versus uncertainty, we've had a lot of volatility in global equity markets and currency markets recently, and during times like this, people look to, unfortunately, central bankers for some level of certainty to make them feel better at night. So we had Fed Chair Janet Yellen speaking in front of Congress, and boy, that's loud.
Sorry, were you, me or what was it?
Yeah. I don't know what that noise was, but
sorry, my girlfriend's cooking up dinner. So sorry about that.
But yeah, so Yellen was speaking in front of Congress. She was testifying, and I watched the whole thing, and boy, it's just like always, it's like watching paint dry, watching her.
Oh God, always.
It's such an exercise to just stay focused on her monotone, completely devoid of emotion voice. But anyway, do you have any thoughts about what she said today, or kind of what happened in the markets?
Yeah, well, just on your last point there. I mean, that's what you get with most academics, just sheer boredom and no emotion. Yeah.
I mean, it's it's kind of like you hear it and you're like, oh yeah, okay, that makes sense, but it's just droning and there's no real implication. You're like, okay, well, I almost feel like I just wasted 2.5 hours of my life. I didn't get anything.
I think they do it just to distract you, so you're not actually listening to the words that come out of their mouth.
Yeah, that's what happens.
Yeah, exactly. You fall asleep, and then they can say whatever they want to say.
Right.
But yeah, so she gave a testimony before the House Financial Services Committee today.
Yeah.
So it's just really interesting to me how quickly the narrative changes when shit starts to hit the fan regarding the Fed, right? Like just before they started hiking rates, they were, really impatient to get, well, I guess they have been patient and they hiked a little too late in my opinion. But anyway, they're talking, okay, the economy is doing well. We're in a good place. Just trust us. We need to start this rate hike to level off interest rates. Mm-hmm. And that rhetoric has now started to die down. Now, it's still there because I think the Fed has to cling to whatever credibility they can maintain. But look at this right here. I wanted to point this out as a USA Today article. It's just, kind of going over the testimony here. Let's see. Yellen said financial conditions have become less supportive of growth. Okay, that's huge. Mm-hmm. And by less supportive, she means we've actually probably, declined, not grown at all, I think. And I'll show you a chart here in a minute, which might be evidence of my point here.
Yeah.
But let's see, where was that other? Okay, so someone asked if the view of the economy has recently been downgraded. Oh, the answer is maybe, but the jury is out. Well, it wasn't maybe just 2-3 months ago, maybe 2.5 months ago, right? It was a sure bet. We're great. Everything is fine. We need to start moving these interest rates up. And now here we are 2 months removed from an interest rate hike, and everything is, we haven't seen a waterfall in the S&P, but we're seeing this slow seeping out, like finally this leak in the dam is starting to break. So it just reminded me recently, the markets are always looking for, correlation and, kind of some certainty to look at. And I saw this chart and it really made me, kind of my jaw dropped, like this right here. And it might, maybe it's small. Is that too small?
Can you screen share?
Am I screen sharing?
No, I see your face there.
Oh.
I think so.
Well, my bad. Hold on. Let me get this, because I really think you guys should see this. Let's do this right here. What about now? Is that good?
No.
Nothing?
No. Yeah, there we go.
Okay, good. All right. So this is a chart of the S&P and oil. Look how closely this has tracked each other recently.
That's insane.
Yeah, just move for move, tick for tick. And, personally, my opinion is that the dollar goes higher and oil gets crushed, maybe down to $20 a barrel, which doesn't bode well for the S&P here if they continue a correlation.
Yeah.
But even still, it's just mind-boggling to me how, for some reason, the markets have tended to correlate with this the oil price. But, that's just me trying to maybe make a connection that's not there. But in my mind, when I see Yellen has uncertainty about the economy, Well, the market starts to, they're attracted to any kind of certainty they can find. So they're finding it in the oil price. And so they're starting to closely track the oil price.
Right.
See what I'm saying?
Yeah. So Yellen says, we don't know, first of all, you never want to hear a central banker say, maybe the jury's still out. I mean, that's the kind of language that's the last thing you want to hear. Talk about uncertainty. I'm sorry, I just lost. Oh yeah, but the market is trying to, like you said, determine what global growth looks like, and it's obviously using oil as a proxy.
As an indicator.
Proxy. Also is copper and zinc and some of the other more industrial metals, but yeah, it's pretty much tracking oil because it's using oil as almost a GDP barometer for the globe.
Yeah, and I mean, I could see how it makes sense, especially given, I mean, maybe it makes more sense than following the Fed these days. It's just jaw-dropping to me, just to see this correlation happen so closely.
Yeah. So do you think oil's sending the right message? I know you wanted to talk a little bit about ISM, which, I mean, I know the manufacturing ISMs, not only in the U.S. but almost globally, are showing recessions in many countries.
Yeah.
So, is oil correct? I mean, we have manufacturing and services, and can the services part of the economy hold up the rest of it in positive territory, or is the manufacturing recession signaling something? So oil's correct, equities corrected too much, and do you have any thought? I mean, it's confusing. So
yeah, it is, and I mean, this is the problem. Is the problem that I see that's rampant in the people that I talk to, and I work in finance. I work for, without going into too much detail, I work for a big mutual fund company. That those people have to cling to the idea that the oil patch decline or the ISM receding to recession levels, that is an isolated event, and the U.S. is not going to be affected by that as a whole.
Yeah, it's transitory, right?
Yes, exactly. So let's look at it. Here's the ISM. And this is just looks like 89 to 2016. So just a small portion of the history of the ISM, but it's been a really great indicator of U.S. recessions. So let's look here. So as it came under 50, down, hit 45, started to increase, and then started receding again, and then we went into a recession. Mm-hmm. And that happens just about every time. We dip a little bit, come above it, and then we break through and recession. And we did the same thing here, dip a little bit under 50, break through, and then recession. And look right here. We dipped a little bit back in 2012. There was remember 2011, 2012, there was some market instability.
Europe, that was like the Europe-Greece stuff was going, so Cyprus was all crazy.
Cyprus, yeah, exactly. So we've risen out of that, but now here we sharp decline. And now we've broken 50. And I think the probability increases of a recession as we get below 50 towards, I think once we hit 45, if we hit 45 and we're still not in a recession, it becomes inevitable that we will be. But I do personally, I have the opinion that we're already in a recession, and that the information that comes out the statistics that comes out in the next couple of months will show that.
Yeah, I agree with you, and I do think we're heading into recession. I also think it's interesting, this chart, that that there's always this snapback, at least in the modern era, and you wonder if that snapback is purely due to central bank intervention. If we go back 100 years and we were able to see what would be a modern day ISM back then, when you get these recessions, does it really bounce back that quick, or is that a totally unnatural kind of phenomenon where we're supposed to stay down here for a while?
Yeah, I think naturally we would stay down for a while and gradually work our way out of it. Obviously, that's not gonna, the Fed needs to take some credit for recovery, so they're gonna do all they can. So I think it's a mixture of negative rates. Probably or not negative rates, but lowering rates. Yeah. In these instances, and throughout time, and now that negative or lowering rates has not done as much as it used to in the past, which I think is just a symptom of business cycle intervention. Without getting rid of the bad stuff, we're not going to have good growth.
Yeah.
So the things that we do to intervene and heal the business cycle actually doesn't heal it. It only prolongs the inevitable. So we get massive drawdowns and then snapbacks when we go to extreme measures.
Mm-hmm.
And I think the next thing, maybe it looks like a massive drawdown with a longer extended pattern upward. Because I don't know what effect QE, if and I think when we have QE4 is going to have on growth in the economy. But
so that's kind of to bring it back to the Fed. That's what I was just thinking, is that during these other recessionary periods, the Fed had a lot of cover to raise rates in order to jumpstart the economy again, whereas this time they have practically zero room to move unless it's in a truly extraordinary way. And so you go, well, is that going to work? And what are the implications of that? And so maybe that's why you see a scare into gold right now, with gold popping well over $1,200 just tonight.
Oof, that's awesome.
1,200 and taking everybody out. Maybe, the market's starting to go, well, this is happening. We are, ISMs, everything's pointing towards a recession. It's going to have to get really easy here, over the next year or so. So we better buy some gold here.
Exactly. I think that's an excellent point. What I think is going to be really crazy to people, or like astonishing, is to see, because I still let me not jump around in my thoughts. I could see the dollar and the gold going up, and I've said this before, going up together in a highly correlated manner. And that's despite what's going on in the dollar recently.
I was going to say the dollar has been weak recently.
Yeah, well, let's look at that. I've got a few charts pulled up, so let's look. So here's the dollar. Let me expand this up so everybody can see it more clearly. All right, so here's the dollar over the past 5 years. So in my opinion, this is an excellent cup and handle. Like, just boom. It's a little bit convoluted around in here and maybe at the bottom here, but you never get real beautiful, perfect patterns. Right, so I take what it's showing me. Mm-hmm. Let's see. So some people would argue this is a double top, but I don't think that is taking into account the amount of dollars that are short right now and that need to be covered based on global currency devaluations, which I know there's a couple of articles posted on your guys' website about. So what I'm looking
at bull flag too, just technically speaking.
Which part? Because I'm terrible at technical.
Just the whole thing. Here? So we've been in a range trade for looks like quite a while here. You just draw a line at the top of the range and the bottom of the range, and then this a bull flag essentially just looks like a flag. It's kind of like a rectangle, and it's just a consolidation period before a breakout higher.
Oh, I see.
Higher. So this is you could say it's either it's a cup and handle or a bull flag, or maybe you could even call it a pennant or something like that. But I mean, the fact that market structure hasn't been broken means that it's still in a bull market.
Yeah, I agree. And this is just a consolidation. You see that is, or I can't say with certainty. So let me make sure I retrace that. But I believe that this is just a retracement, just a consolidation point right here that you see typically in dollar bull markets. And, maybe we drop to 90, which I think is possible. I think Raoul Powell drew some excellent charts on Twitter today. I didn't pull those up, unfortunately. But so his call is like the short term might be, or like the highest range right now might be, around this area, 95 area, or to 93, and then a breakout up. But he could see it going as low as 90. Mm-hmm. And then, but he still is completely bullish, and I agree. Just based on the fundamentals of what's going on in the world, the fact that so many dollars are short, that short's got to be covered, and that means demand for the dollar. Plus, exacerbating that demand would be a global recession, internationally and domestically. So I think this is just a setup. It's just a very typical consolidation right here. Because let's look at JPY, USD JPY has just gotten crushed. Japan, the yen's gotten stronger. Let's see. I'm gonna make sure you guys can see it before I move on. So look, I mean, bam, 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 and that's not what Kuroda wants. He wants yen inflation, because to him that equals growth. So that's only gonna put more pressure on Kuroda to ease, which will only, I think, decrease the value of the yen against the dollar. And the same with euro, which I'm looking at right now, which looks almost identical to the DXY chart, and that's because the euro is like a 33% weighted in the DXY, the dollar index. So pretty similar looking pattern here. People perceive the euro and the yen as a store of value and as a safe haven, so that's what's going to go on. But it's counter to what Draghi and Kuroda want right now. So they really have to. That puts pressure on them to ease, and then the dollar goes up, and then maybe Yellen eases, right? But if Yellen eases, what does that say about the global economy? So I think in every instance, whether we're easing or we're not, or we're raising rates or we're lowering rates, it doesn't matter to me, because I think dollar bullish no matter what, at least for the medium term.
Yeah, I agree. So, just to wrap up my thoughts on this, it's interesting that the dollar is fundamentally strong, like you said, and it has been. But the reason that we've come off is due to technical reasons, is my opinion, more than anything to do with monetary policy, and that the dollar was a crowded trade, and it just so happens that the timing is really poor. To where Kuroda wants to ease, and the EU, the ECB needs to ease, but you're getting this technically driven move in the dollar lower to just wash out people out of the market, I think, and so it's really putting them in a bad position, to where a position they really shouldn't be in anyway. But you're right; it's going to force them to ease more, which is going to reinforce the old trade even more than it did before. So I think you've got this kind of unfortunate circumstance where the technicals are really hurting the parties that need to be helped, and it's just going to exacerbate the fundamental situation at the end of this thing anyway. So
exactly, and that's exactly what's going on. We're having the perfect storm of global, circumstances and technical circumstances that are intermingling into a really big jump for the dollar, I believe, at least temporarily. Now, I know before the call tonight, we were talking a little bit about, what happens in QE4. I could see a couple scenarios where, the dollar finally comes down to where I believe it should be valued. But I could also see where it could get worse in terms of more and more dollar going up. So, I mean, maybe we could talk about that in a different conversation. But, what I see right now, I see in pretty much any scenario in the short to medium term is I'm dollar bullish and gold bullish. And that was my point, was that we could see both going up simultaneously, which is just, you don't see that happening in the world very often. But when you do, things are really bad. Yeah.
Well, I agree with you there. And, I'm sure we'll have more to talk about next week on this for sure. But kind of my main takeaway from this as a trade, at least, is, if the dollar gets down to that 9 area, buy it, because that also is that, just looking at it in my eye, it just looks like that's the 38.2 fib level, retracement level off the whole thing. So I think that, that's where you buy it anyway, technically.
Nice. Yeah, I agree. Maybe if you're a little more risky, you could buy dollar against the yen, buy dollar against the euro. I'm still extremely long dollar against the Chinese yuan, expecting a devaluation, but we could talk more about that too in another time.
We'll talk, because they're in vacation holiday mode.
Yeah, exactly.
The PBOC will gear the rhetoric back up next week, which we can touch on for sure.
Right.
But just to wrap up real quick, folks, I wanted to touch on Ethereum. Can you see this? The Ethereum chart?
Yes, I can.
So this is the daily chart, and usually we got a really nice rounded bottom, but recently this thing has started to go parabolic on the daily chart. I mean, it's been parabolic on the lower time frame charts, but OBV looks good, MACD looks good, RSI looks like it's about to break out again. We have a volume confirmation on this most recent breakout to 12, so on the daily at least it doesn't look like it's topping out. And just for some reference, this guy on TradingView that I follow a lot, Low Strife, who's really well respected in the Bitcoin TA community, he posted a comparison chart of where Ethereum is today compared to previous Litecoin runs that have been really big in the past. And he specifically used this last one where it went from like $1 to $10 in a matter of a couple weeks. And if you look at the relationship and you adjust the values, we're right in the middle of this thing. So it's almost like Ethereum is right in the middle of the rally where, it feels like, and it has been, like a 5 or 6x rally up to this point. And people on Twitter going, oh, I got to short this thing. It's parabolic. It's got to start coming down. Well, first of all, it doesn't have to start coming down until there's a technical confirmation. There's a signal on the chart, which there isn't yet. But also just historically compared to other altcoins running, this thing has more room to go. It can always go more than you think it can, is kind of my point of this whole thing. You think, 0.02 is the top? Well, then it's probably going to be double that. So, just temper expectations and don't ever get in front of a train like this as far as trying to get short something like this, especially not on margin. Wait for a top, wait for a correction, a bounce to test the highs, a failure there, and then you can sell the hell out of it. But this train's running, and you don't want to get in front of it. Even though I looked at a chart the other day of Ether transactions, like a chart of like the Bitcoin chart of total transactions, kind of excluding popular addresses thing that a lot of people reference. A chart like that, and there's no Ether is not being used for anything economic. This is 100% speculation at this point. So the floor can get pulled out real quick, but that also means that the juice in this thing is, again, greater than you can possibly imagine. And so we're expecting at least some more upside here in the very near term, just looking at this daily chart. Do you have any thoughts on Ethereum, Rich?
Not specific to Ethereum, but just want to say that's some really great advice because, a lot of times the market can move against you longer than you can stay solvent. So,
and in crypto, it almost always does.
Yeah, exactly. You almost always run out of money before the market goes the direction you want it to.
Right.
I mean, that's why like the sort of war cry of, classic shorters, people who make money off shorting stocks, is that a lot of times they're perceived as wrong before the move happens that they're expecting. Yeah. And, you just don't want to get caught up in that because I look at it as like a pendulum, and that pendulum can go really high before it starts to come back down. So,
oh, absolutely. And just from experience and just talking to traders, it is much easier to buy the bottom than it is to sell the top. I mean, exactly. Always. I mean, just look at this chart. You had an eternity to buy the bottom here. I mean, you had months.
Yes, literally.
To buy the lows here. Whereas if you just study any market as it tops out, you typically get a matter of seconds to sell the top, and then it's all over. Right.
Or then you try to sell the top, and then it just keeps going.
And then it keeps going, right? So yeah, it's best to let it top out and then get in on the bull trap. That's the classic shorter kind of move. Is you sell the bull trap is your signal to get in and start pounding the hell out of the thing. But until you get that pullback in the bull trap, and you keep getting breakouts, man, you keep getting taken out.
Exactly.
Yeah, word. All right. Well, it was great talking to you, Rich, as usual. We went a little long this time, but I'm glad we had a lot to talk about.
Yeah, I really enjoyed it. And, sorry if we bored anyone, but I thought it was invigorating. So thanks.
Me too. Yeah, screw them, right?
Yeah, exactly.
I like it.
No, just kidding.
Right. No, we love you.
Yeah,
exactly. All right, Rich. Well, that's great. Have a good week, and we look forward to talking to you next week.
All right. Thanks. You too, Adam. Take care.
Good, buddy.
Bye.